Investment at Money on 93.7 Money FM, and of course, a time when we get to be joined in by our resident consultant on investment at Money on 93.7 Money FM, talking about Mr. Jones Sambaombe, right on investment at Money. He is, of course, a financial advisor, and of course, we are all right here to have them conversations around investment at Money. Mr. Sambaombe, I would love to welcome you to investment at Money.
Good afternoon, Moses. Good afternoon, listeners, viewers. Thanks for having me. It's a date already.
Yes,
Wow.
indeed. Time off flies, obviously, and could be the realist that we need to at least stick with time and just be part of it as it all flies, as they say. Today's conversation has huge interest, especially to activities that might be coming in and happening at the same time. Talking about dealing with inflation during economic downturns. What an interesting conversation. Topic itself, Mr. Sambawumbe. First things first, what should we understand out of this topic? I know you have a lot for us on today, but what should we understand, obviously, out of the topic, dealing with inflation during economic downturns?
Yes, it's another buzzword, Moses, in the markets in the country. This animal called inflation.
Mhm.
In the first place, just a few days ago, we took a walk to a spice shop like Antemba to get some drinks because it was hot. When we entered this shop, we found a man arguing with the cashier that, you know, this is not my bill. I wasn't expecting to have such kind of a bill.
Mhm.
He bought items for about 180. Meanwhile, his budget was about 120. So the cashier and the buyer spent about 5 minutes just going through the bill. They did a recalculation
Mhm.
and discovered that actually it was the same amount. The cashier was right. Then the bar said, "What's really happening to the man? Why is money flying?" I chipped in and said that, "My man, there is a thief called inflation,
Yeah.
which sneaks in your wallet quietly and erodes your purchasing power." Then he looked at me majestically. He stared at me. Inflation? What do you mean by inflation? I now started explaining
Yes.
in its simple terms, simple language, Moses.
Mhm.
This is the rate or the speed at which prices rise, prices of goods and services, your groceries, your clothing, your services over a period of time. Okay?
Mhm.
Now imagine you are at a school fair, care for your children,
Mhm.
and there's only a limited of number of cupcakes. If everyone wants a cupcake, but there is not enough, the price of cupcakes might go up. Why? Because of demand. That's where now the price chips in. Why? Because there is high demand. The same animal inflation. There is nothing new in Zambia. I must confirm. We've read, we've seen the famous historical example of the German hyperinflation in the 1920s, where
Yes.
people were using a wheelbarrow full of money to buy a loaf of bread. Okay? But they still survive. If the prices rise too fast, it can make hard for people to plan for the future,
Mhm.
save or invest. Have you seen why this animal, we can't just lock it? We need to address the white elephant in the room.
Wow. Interesting. So if you're just joining in, investment at Money on 93.7 Money FM, and we are in conversation with Mr. Jones Sambaombe. He is a financial advisor, resident consultant on investment at Money on 93.7. Now you can follow the proceedings live right in Facebook as well. Be in conversation, drop in your message, and of course, be in touch on 077 1616290. That's 077 1616290. And of course, you can be in touch as well, 0967 Dealing with inflation during economic downturns. This is where obviously the conversation is. Now, of its interest, I know there is much anticipation around the business world, but right now it's all over, and it's the news that is in the space talking about the MPR that was increased and just trying to assess and then its relationship, especially around the business world itself, Mr. Sambaombe. I think the first things first, let's look at that and we dive in obviously on how we can deal with inflation during the times or downturns around economic downturns around economy. The MPR, what's the relationship that definitely comes in? The MPR was obviously increased from 9 to 10%. So this is a huge conversation around business peer-to-peer or bank-to-bank lending, down obviously to the consumers as well as the business people themselves. What is the interest around this, Mr. Sambao, especially in relation to business?
Great question. Actually, what I can urge business owners, businesses, is not to panic over this. And if you are worried, it's normal to get worried. Worries bring productivity and action.
Yeah.
You don't need to worry. But if you're worried, it means that you must take some action. I was following the proceedings from the Bank of Zambia and the announcement of adjustment upwards in terms of the MPR, monetary policy rate, the interest rate, by 50 basis points, indicating 0.5% upwards.
Mm-hmm.
You need to understand the dynamics of this interest rate.
Yes.
Now, before I even go to the interest rate, since we're discussing inflation, we need to understand what drives inflation.
Yeah.
Because interest rates are one of the key drivers of inflation. For inflation, currently, we're standing at 10.3%. That's for July, from 9.8% in June.
Mm-hmm.
And this is making it the highest reading since April 2022.
Yes.
Okay? This upward pressure is coming from food, the cereals, Moses.
Mm-hmm.
There is your mealie meal, there is your roller meal,
Yes.
there is your breakfast meal, there is your cassava meal. You're talking of milk, cheese, eggs, and vegetables. Food is driving inflation. Okay?
Yeah.
Now, there are other key drivers you may think of. Increased consumer spending. When there is consumer spending in the economy, that raises inflation as well. Okay?
Yeah.
Rise in production costs. If there is an increase in raw materials, what do you expect me to do as a business owner? I should pass on the costs to the consumers.
Yes.
Okay? Supply chain disruptions. We've seen trade wars. We've seen the war between Russia and Ukraine. Ukraine is the basket, rather is the food basket, okay, including Russia, meaning that our imports will get expensive when you are importing items and commodities from Russia. Physical policies, okay, government spending as well as taxation, okay, subsidies, increase in wages, not forgetting the national debt. We need to pay debt. How do we pay debt? Okay, that increases money in the circulation. Okay, now when you've got too much money, demand in circulation,
Yes.
that now raises inflation. Why? Like I said, inflation, this is just the rate, the speed at which prices go up. They go up over a period of time. Now, here comes the central bank, the Bank of Zambia, whose mandate is to enhance price stability as well as financial stability. Can they sit back and relax to say that things will be on autopilot? No. They come with MPR, monetary policy rate. They use interest rate as a tool to control inflation, to slow down inflation. Because if you don't control inflation, Moses, this may lead to a recession. And who wants to go into a recession? No ways. That's something else for the country that you can never imagine of. So they get some indicators. And the only way they can do this, Moses, is to touch the interest rate. Okay? If they adjust the interest rate upwards, it means that there is a cost of borrowing. The existing that you have with Bank A or Bank B, it means that it becomes expensive. Okay? They make it expensive for you to borrow so that they reduce some level of economic activity, some level of consumer spending that is leading to inflation. Have you seen how this machine is working hand in hand?
Yes.
Okay. Now, rather increasing the cost of borrowing, it means that the business owner will need to face business profitability. Why? Because they will not receive the expected traffic. They will not receive the expected sales. Because there is someone out there who wanted to get a loan from a financial institution. Okay?
Yeah.
There is someone out there, the financial institution has informed that, hey, Mr. Moses, following the announcement of the central bank, an increase in MPR, we are adjusting your interest rate depending on the type of loan you got. If the loan that you got, if the rate is floating, it means that your loan will be adjusted. If you've been paying 1,200 kwacha as a loan repayment, they will do the calculations, they'll give you a new figure. For instance, the figure may go upwards to 1,300. It's just an example.
Yeah.
Some institutions think of increasing the tenure, the repayment period. They'll say that, all right, Mr. Moses, please come through when we have a chat. So it's either we're giving you an option. Should we choose the repayment amount to be increased or the tenure, which is the repayment period? You can choose either.
Yeah.
Depending on what you like. Have you seen how this plays? Now, this cost of borrowing, which is the MPR, on the other hand, we must look at things from both angles, not just criticizing. Okay?
Yes.
Because I'm sure the central bank, they have had sat down to monitor the situation, to analyze the effects, the cause. Hence, they came up with a decision to make an adjustment. The other side is that some people have been planning to expand their businesses through loans. When we get that loan from financial institution X, we're going to expand our business. Now, since borrowing has become expensive, have you seen how this has affected the expansionary visions and behaviors for businesses?
Yes.
Meaning that they also need to adjust. Once they adjust, they'll try to cut some costs and expenses. In the process, some institutions will also need to invoke layoffs. Now it's communicating to unemployment.
Yes.
Okay? Now these things are manageable. It's inflation. It's you just need to go through it. There's nothing that you can do. Yes, it's not permanent. You just need to give it a bit of time. Once there's an adjustment, you see how it performs. Now it will be the mandate, it will be the role of the Bank of Zambia to monitor how the financial institutions as well, in terms of the regulatory framework, because they need to achieve the financial stability at the end of the day. Yes, it is a punishment, but the fruits, long-term fruits, this is good for the country, because if you leave it unchecked, and they are also communicating that, if you are a person who is complaining about inflation, the rise of prices of goods and services, it is an opportunity for you to increase your productivity. Increase your productivity, because at the end of the day, you must produce. But now, if you're just complaining you're not producing, who is going to create value in the economy? Because it's value that attracts money. So that statement, no, there is no money, there is no money. So who do you expect? Sorry, mother, sometimes I tend to sound harsh, but it is what it is. People, you must be productive. You must be participants, not just spectators of this economy. Exactly. That's how the MPR will impact businesses. There are some benefits as well as disadvantages. So you need to find a balance as a business owner, as an employee. This also means that if you are an employee who is depending on a paycheck to paycheck, it's high time you cut some bad habits, okay? Because when there is an adjustment, it means that you must adjust as well. Those who've been investing for some time, they have remained invested for a period of time. They can't even feel the effects. They know that, okay, they'll just start the market. That's what is happening here. But a person who is just depending on a paycheck to paycheck, please cut your girlfriends. Stop eating out. Okay? Look at your expenses. Monitor them. It is just for a short period of time. When you recover, then you can continue with your life. But as you do that, you don't compromise with the quality of life. But it's high time we adjusted and became productive.
That's Mr. Jones Sambaombe, right on, of course, 93.7.
93.7. Martin Kasonde Walia. One wonders how indigenous Zambians will ever move out of poverty. So that's a thought coming from Martin Kasonde Walia. And of course, Muhammad coming through as well, the trusted financial advisor. So that's from Muhammad. It's good to know that you're locked on and following the proceedings as well, right on the Money FM Facebook page. So it is maybe coming through as well. So it's good to know everyone. So maybe good to know that you are following the live proceedings right on the Money FM Facebook page. You can do the same. All you have to do is check out Money FM Zambia, do like the page and be part in conversation. Drop in your message, drop in that conversation. We'll be right here to pick it and be you, obviously, part of the conversations right on investment at Money. I'm in conversation with Mr. Jones Sambaombe, financial advisor. I call him the most trusted financial advisor. So do you. And of course, right on investment at Money, he is the resident consultant. And of course, we are always together to share in the conversations themselves. So looking at, of course, dealing with inflation during economic downturns themselves. I seem to have a call. Hello.
Good afternoon.
Good afternoon, Mr. Mubanga.
Yes, sir. Good afternoon, Mr. Jones.
Good afternoon, Mr. Manga. Glad to hear your voice. How have you been?
I'm all right, sir. Thank you for the insights.
Thank you. I appreciate it.
Yes, sir. Now I have a question. Concerning the banks. You have said that since the MPR has been increased by the central bank, even them, according to the loan that you are holding with them, they will adjust upwards. Now, what about the savings? Somebody who has the savings in this same bank or any other, are their monthly interest going to increase also, or what happens?
All right.
Thank you
That's
so
a
much.
very important question, Mr. Mbanga, and thanks for that. You know, the central bank is the bank for the banks. Okay, it is the regulator.
Banks. In this case, we're talking about the Bank of Zambia. Once they make a decision to adjust the MPR, it means that the banks must adhere to this policy, to this adjustment. Now, MPR, it's in two parts. Remember, there are lending rates. There is also the interest rates you're talking about on the savings accounts.
Yeah.
So those interest rates as well, depending on the type of a savings account you have, you need to visit your bank because they also adjust those interest rates on a monthly basis, sometimes even on a weekly basis. Visit your bank, have a chat with them that now, how do I move since there is an upward adjustment of MPR? Why should I where should I invest my money? Should I continue with my savings account or what are the new interest rates? So check the new interest rates. Once you check them, and then you can make a decision depending on your situation, depending on your goals. Because our situations, Mr. Mwanga, they differ. I would advise you to visit your bank, have a conversation with them. Thanks.
Well, so that's the advice coming in from Mr. Jones Sambaombe. And of course, good to know that you're locked on Mr. Muranga to invest with the 20 Money FM. You can do the same. 077 of course, 0967 Alternatively, you can drop your message right on Facebook and of course the Money FM Facebook page. We'll be able to get your message and we'll be able to share it out as well. The conversation is on right on investment at money. As I'm in conversation with Mr. Jones Sambaombe. Alternatively as well, you can drop in your messages. 077 Those are the two lines right on investment at money. The breakdown on the MPR, Mr. Sambaombe, and of course, notably coming through Mr. Mwanga, asking on the interest rates. This is around the savings accounts. Well said and broken down as well. Now, dealing with, of course, inflation during economic downturns, the conversation and the heads up, especially the conversations themselves that we have. What are we talking about, especially in dealing with it? The actor says, how do we deal with it? One of them, obviously, you've given is the heads up around Mr. Mwanga, but how do we just get to be involved and deal with inflation during economic downturns?
Great stuff. Great question. You must understand that when you're faced with an inflationary environment, inflation persists during downturns due to a variety of factors, like the ones I mentioned earlier. Supply disruptions, production costs, reduced supply of goods and services. This leads to price pressures. Now, you must not panic and always remain invested. Stay disciplined. Do what you need versus what you want. You must be able to differentiate between needs and wants.
Yes.
You already need this one. Should I postpone it? Do I need to paint my house and renovate it now? The house that you are living in. If you've got a budget of painting it, now the prices of paint and other items for painting are going up. If there is an opportunity, like what Mr. Mbanga said, if there is an opportunity that the interest rate on your savings accounts go up,
Yeah.
don't save money too much at this stage. Only concentrate on an emergency fund. Emergency fund because it is going to cushion you during the downturn like the one that you can feel. We can feel it, all of us.
Yeah.
But the ball is in our court. As long as the government is able to provide an enabling environment, the rest remains with us. Another strategy that you can use to help to navigate inflation is to diversify your portfolio. Okay? Don't just put all the eggs in one basket.
Yes.
Real estate and commodities tend to do very well during economic downturns. the gold. Moses, you're looking at me like when I talk about the gold,
Yes.
gold does very well during economic downturns because it has got inherent wealth.
Yes.
Okay, commodities like oil, agricultural produce. This is the time to expand your agricultural produce because there will be demand. If you see what is causing inflation, what is driving it, it's food.
Yeah.
Actually, there are two major drivers, most
Mhm.
oil and food. Once you just hear that the oil prices have gone up on the international market, you expect the oil prices, the palm prices to go up in Zambia.
Yes.
These things talk to one another and each other. You focus on stocks, okay? Stocks that are doing so well. There are some sectorial companies.
Yeah.
Look at the companies that perform well in during this period. The health sector, okay? The IT sector, the infrastructure, health sector, okay? Financial services. You should know where to put your money when you talk about stocks. And don't have a short-term mindset, you should have a long-term perspective. Because when you go for short-term investments, you are going to face market volatility. Like I said, those who invested 20 years ago, they can't feel the inflation. They just say, this animal as well. Okay, what should I put my money on? Okay. So you can do bonds as well. Do a mix. Look at the number of years that you love to invest to invest in the bond market. Should I go for 5 years? But again, should I go for 10 years? Depending on your financial goals and situation, as well as attaching the market conditions at play. It's not one size fits all.
Yeah.
It depends on your situation. Have diversification that will really help you to manage the risk and achieve the potential returns. You can go for another strategy, Moses.
Mhm.
The other strategy that you can use, please don't hold on cash too much. What I call mattress banking,
Yeah.
because that cash, the the value will be eroded very, very fast at a faster pace. You must try to balance. You only hold cash for emergencies. That cash that you've been putting under the pillow banking, please go and invest it. If you can't find an investment at the moment, go and find a savings account with higher interest rates. You can convert into an emergency account. But again, don't save too much. You must be balancing its clutch versus the accelerator
Yeah.
as you move, because the car must be moving always. Increase your productivity. It's high time for those of you who are in employment. Okay? When you have a conversation with an employer for a pay raise, don't go and have a money conversation. They'll turn you down off. Have a value conversation that this is the value that I am adding to this company. You go through the numbers. Hence, I'm asking for a 10 or 20% increment. During inflation, I have never heard any single employer, when the inflation goes up, they also make a meeting to make an announcement that, oh, dear employees, since the inflation is at this rate, we are increasing all your wages and salaries. Those are exceptional cases. Why? Because even the businesses are hard hit. Okay?
Yeah.
And this is what they call built-in inflation. The more you increase the salaries of employees and the wages, you attract, you cause inflation. Why? Because there is a wage price spiral. Those employees, when they have F salaries, they'll go and buy a lot of stuff in the market.
Yeah.
There will be an increase in consumer spending. When the business owner notices that, oh, there's an increase in consumer spending, he's going to rise Rather, it's going to raise the prices. Once it raises the prices, the employees will still go back to the employer that things have gone up again. Please, can you increase our salaries? Have you seen? It is a cycle. Another way to really manage your inflation, to outpace inflation during an inflationary environment, is you must increase your income streams, your income sources. Like I always say, don't rely on one source of income because you are on life support. Ensure that you have more than 4 sources of income. There are a lot of things to do to keep you productive nowadays. If you have one single job, you must consider starting a side hustle. You must consider starting a business so that you increase your income. When higher inflation comes, it will be just water under the carpet. It will be just porridge because you really won't feel it. You are going to invest more. And the other types of inflation which I can also talk about is demand pull inflation, which happens when demand for goods and services exceeds their supply. Okay?
Yeah.
Increased spending in the economy. There's also a cost push inflation that we may be feeling at the moment. This occurs when the cost of producing goods and services increases, leading to higher prices for consumers. Why? Because businesses are passing on the cost to consumers. And other types or causes of inflation, like monetary inflation and imported inflation. There are so many causes. Due to time, I'm sure next time I'll go through each and one of them.
Okay, so that's Mr. Jones Sambaombe, right on 93.7 Money FM conversation, right on investments and how we obviously get to deal, or how we can see to it that we get to deal with inflation, especially around or during economic downturns themselves. You can follow the proceedings live right on the Money FM Facebook page. All you have to do is check out Money FM Zambia, and of course, do like the page and be a part in conversation itself right on the Money FM Facebook page. Alternatively, you can drop in your text message 077-1616-220, and of course, 0967-865040. Alternatively, you can drop in your voice call and we'll be able to pick right on 077-1616-290 and 0967-865040. So those are the two lines. Dealing with inflation during economic downturns. This is the conversation where it's based on, and of course, we are all right to have you on board as well. So, Mr. John Sambaombe is ready to break down every piece that you have, and of course, what you want to, hear from him as well. So, interesting. You have given us the options, and of course, you have given us the way we can obviously get to handle, to pass by this economic downturns themselves. That still come around inflation itself. Now, what other, of course, options can be considered, especially if you're planning to start a business? Is it all good now? Is it all good to work around the financial and say, okay, I'm going to start a business now? Is it all good at this period in time when inflation seems to be persistent?
Very, very, very good. You make money even in an inflationary environment. Where there is a challenge, there is a silver lining, Moses. Opportunities, they're all over. Okay? So as you prioritize your essential spending, you know what you spend on. Okay? You know what you invest on. Smart shopping. You should be looking for stores where they offer discounts, where you can negotiate as well. But please don't move from Charleston all the way to McCain, and then you discover that there's a promotion for something. The discount is only 10 kwacha, and yet you've burnt your fuel, you've paid transport. You need to be strategic and intentional in the way you do things. Please, to all the debtors, this is the time to reduce your debt. Don't take on new debt unless you have a very powerful project that is income generating. Otherwise, don't take debt, don't pump money in your credit card to go for a vacation. Don't pump money in your credit card to go out and have champagne unless you have prepared, you've been saving for some time. This is the time to start reducing your debt. You start tackling the high interest debts. That saves on costs. Do it gradually. And you tell me that this is workable. Opportunities when you start a small business, Moses, that you really complement that income that you are getting from that employer. Look out for the sectors that always outpace inflation, like the ones I mentioned earlier. The technology sector, everyone now is going digital. All the businesses are going digital. This is an opportunity for you to sell something digital, okay? Instead of just working the whole day, okay? Yes, please sell something. You know, money follows where value is, okay? You must inculcate, you must start a new relationship with money. Try to understand money. Study how money works. Then you won't have a problem. The problem is not the lack of money. The problem is the story that you have about money. Please, as you reduce your debt, don't take new debt. That is going to make you suffocate. You start accusing people of witchcraft. You start thinking that everyone is jealous of you because there are some habits that you don't want to get rid of. Money is just as abundant as oxygen. It goes to those people who offer value. It goes to those people who are able to see opportunities. Even in a desert, you can sell sand. Opportunities are all over. Now, as you prioritize your spending, take a notepad. Check your income. Where is this money coming from? Also check where the money is going. If you understand where the money is going, surely there are some parts, there are some items which we call discretionary spending. You can cut back what is not necessary. You lose nothing in not going to watch a game at the stadium. If you want to save a 30 kwacha, as long as you invest it in something, you lose nothing in going not to in not going to watch game in wildlife, in the game park. Form some new habits about money and then give it some time because it's gradual. You're going to see the benefits. Because remember, I'm not saying that you stop borrowing because the debt that you create, it's an asset for someone. I'm not saying that you stop spending. No, spend. The money that you spend, it's an income for someone. Okay? That's how we are going to grow the economy. Yes, the government has given us the inflation rate, the government has given us the MPR. It's their responsibility, okay, to monitor what is happening in this economy. It is our responsibility to ensure that we are more productive. We are focusing on building our skills. We focus on building new skills. Improve yourself. If you don't improve yourself, money doesn't like knocking where there is no quiet. As you do these things, please, I'm not saying that, no, you go and shout your spouse. No. John said that, no, now we should cut everything. That must not compromise the quality of life. Continue moving, clutch, accelerator. The vehicle, the the car must continue moving as you are doing. These things are very enjoyable once you know them. You stop complaining. You stop thinking that, no, I've been bewitched. You've been bewitched. You want to become a millionaire and you are hanging out with it, losers. Okay? You want to become a better employee and you're hanging out with it, school leavers. Always check your environment, check your relationships, the people that you are hanging out with, because the environment beats the wheel.
Well, time not the best factor sometimes. Of course, sometimes it is always like that. So we have to say what about it. How time flies when you're having obviously some great conversations. And the conversation around dealing with inflation during economic downturns. In conversation with Mr. Jones Sambaombe, the financial advisor right on investment money. And of course, you can get to have the live conversations right on Facebook, the Management Facebook page, as well as on 93.7 Money FM. Mr. Sambaombe will have to self-advise. What would you conclude remarks of this conversation?
Wow, time flies, Moses. I can't believe that you've already done those minutes. To the government, you must always ensure that inflation is steady, manageable, and tolerable. Okay? Please focus on policies that enhance productivity, innovation, and competitiveness. Because out there, a small business owner wants your support during this time. And I believe you're doing everything possible to ensure that we have a stable environment. My fellow Zambians who are listening at the moment, remember that while economic downturns and inflationary pressures may challenge us, they also present opportunities for growth and financial empowerment. By arming ourselves with the knowledge and apply it, adopting prudent financial measures, and remain resilient, we are born and preserved for such a time, Moses.
Yeah.
We can rise above the challenges. Think inflation as a force, okay? That tests your financial foundation. When a tree is going through some storms, the roots delve deeper, okay? And it always emerges stronger. Because of the economic uncertainty, we must always embrace diversification. The government can't do it alone. They need the private sector. There must be partnership. Proverbs chapter 11, verse 1. I know when there are uncertainties in the economy, some scammers, people with ill intentions, try to scam others as well because they know that there is lack of knowledge. Proverbs 11, verse 1 says, a false balance is an abomination to the Lord, but a just weight is his delight. The scripture highlights the importance of honesty and fairness in all our financial dealings. Thank you, Moses. Thank you, listeners. I appreciate it.
Well, that's Mr. Jones Sambaombe. Excuse me. That's Mr. Jones Sambaombe right on 93.7 Money. Of course, the conversation around dealing with, of course, inflation during economic downturns. Right on 93.7. Till next time, do keep it up to money and do not touch that.